Hey, Ripzoners, or the Ripzoners. I have never seen you guys before, at least in this way. Of course, I've been in the room spying on you. And let's see here. Let me get you guys on the chit chat here. The Ripzoners. So what are you guys doing here? You talk a little vol, you talk a little VIX, you talk a little Ripzone. You know, Hans is always almost organized. You know, it's this menu at the side. It's like, how do you find everything quickly? It always kind of pops up to the top. How's everybody doing? Who have we got in here? The Zonies. Hey, Vicky, the Zonies are here. The Ripzonists, the Zonistas, the Ripzonistas. I know. I just always want to see your beautiful avatar faces. Vicky, you have a lovely dog there. Ted is brave enough to put his face on there. Shane as well. All right. So let's let me do a little share. Let me do a little share here, because sharing is caring, and I do care. It seems like I don't sometimes, but I do care almost as much as Andrew. Andrew's such a good guy. Let's take a look. So I think what's really interesting lately, I usually start my classes with a little bit of kind of macro view of things, you know, whether you like it or not. So I think yesterday was kind of important. I think tech is, I've been saying for a while that tech's a tough place to be. The broadening is really where it's at. I think there are a lot of headwinds in that tech space, except the unique areas, right? Oh, thank you, Ted. Unique areas. Yeah, let's take a look at that, Senor Roberto. So yeah, so I just think anything kind of, I think it's a binary world now in the stock market, and there's going to be those who they think are going to clean up and those who think are going to be disrupted. And so others start with the joke. Jerry, you're everywhere. You are everywhere, my friend. You must be making money hand over fist. So yeah, so I think it's just, you know, the one area that I kind of thought might be a bit positive is that physics. So anything physical and AI is going to be good. Like, so I think Apple, I think they're going to be good because they've got that transmission mechanism called the iPhone and the computer and the Mac and all that stuff that's going to do well as people want AI everywhere. But and then semiconductors, I just think there's just going to be massive demand for semiconductors. And so yesterday's move is just a little bit concerning, just because, you know, it kind of felt like they were about to make a new move and it completely failed and fell back. Which album is that on? Here, There, and Everywhere. Is that it? That sounds like a deep cut, Jerry. And some of the things, I've been a little bit cautious lately, and I'll tell you why. And you know, I was a massive bull for a good chunk of the last year. And I just look at some things that are just a little bit concerning. You see, if you guys look up I mean, first of all, the VIX is over 20 with markets pretty close to the highs. And number two, I know you guys like to look at the 9-day VIX as well, which I think is good. We should look at that ratio. We got Blue Owl, which of course is the credit worry area where, you know, they're lending. So the way I see things is agentic AI is absolutely massive. If you're not looking at it or using it, you probably can't appreciate it, but it's really starting to change things. We know in software, but I think it has extension abilities to sort of many areas of the economy. And so I think you've got a lot of kind of companies that were funded that were unicorns, and now they're not so unicorny. They're just corny. And so look at KKR. next leg down. The XLF I was concerned about, right? So this is your financial sector. I'm actually trying to pick up some puts. Look at this. We bounced back. We got above this little line here. This looked ugly below this support, and we bounced back, and now we're coming back down. And I think there's a chance that we keep going. We're not seeing a lot of worry in HYG, right? High yield yet. We may not, right? So it's not, I'm not getting super bearish, but I'm just kind of getting aware of, the other day I said, I'm not as bullish on Goldman. Remember how I was super bullish on it from about 600? And now with maybe some of the IPOs, maybe getting challenged, maybe things just aren't quite as beautiful on the deal making side for somebody like Goldman, just maybe. We know there are going to be some massive IPOs, but are we going to get a lot of those little IPOs? Little companies that went, hey, I've got a great piece of software that's going to change the world. Okay, I can now Claude code it in like an hour. So I saw this one guy, he's like, oh yeah, I looked at what Cursor was doing and looks great. They probably spent $100 million developing some new tool. And he's like, yeah, I taught my thing to do it in like 20 minutes. It's probably not as good, but it's hard to ignore stuff like that. So the world is changing, and I wonder how that's just sort of going to play into sentiment a little bit. So far, I think the market's been rather resilient considering these issues and the Citrini and all that other stuff that's been kind of, but I have to say that I think those narratives have staying power. Yeah, I think there's staying power because I think these tools get better and better. So yesterday I was shorting more of the software index. I bought more downside in Microsoft around 405. We did some in Turbo Income, actually. We did a nice income trade there. We did one a couple weeks ago, then we covered, then we did it again. So I think we don't have to go on and on about this stuff, but I think MAG is a little bit challenged. And I think even they're kind of wondering what their future looks like. I've got to be honest with you, because you just don't know. Things are changing so quickly. So I think, anyway, what this all means is that I think it's more of, and Netflix is interesting. I did buy some 2 days ago. I was just totally lucky, but I saw it had a nice 2-day move, 1.5 day move. And I went, okay, but it's time to start buying just some stock. I did buy some higher too, but nice average down. But I think anything digital, anything kind of in the ether, bits and bytes, is going to be challenged because of all that stuff we talked about. And so that means people are probably still going to push into the infrastructure. Now, if we get a really big sell-off, and I hope Andrew's going to have you in like lots of upside, VIX upside, and VXX and things like that. If we get a big sell-off, then we know that what happens in big sell-offs? Are you safe in everything that's been working well? Yeah. Are you necessarily safe in GEV or GLW if we get a severe sell? And I'm not saying we do get that, but the answer is no, right? You start to get correlation popping up, and yeah, not always, Shane. You get people sort of, what happens in larger sell-offs, and especially very large sell-offs, is they become liquidity events. And that's what makes those VIX plays and things like that really nice, because the curve gets to the point where, like, if you don't really want to own, as you guys know, you don't really want to own, downside, puts in the S&P. I mean, they're cheap, but you don't really want to position in VXX when you don't have that head start from the curve, right? It's actually when it starts to flatten and get concerning that you start to get that reactivity, right? You get that reactivity. Yes, you're paying more, but what happens when the curve is flat? What happens when the VIX curve flattens or even inverts, and we get a little bit backwardated? Think of the importance of this concept, because everyone's always trying to buy those cheap puts, and they always go to zero, almost always. And they buy cheap VXX. They think it's the greatest way to like protect against downside. And lo and behold, The thing's down 99.9% in its lifetime. So people are often buying when things look good, and that's okay in a sense. You're sort of buying a bit of protection, I guess, for that unknown possibility. But the problem is the curve's not helping you, right? The curve's not helping you. Let me bring this up here, and then we'll maybe look at a little Netflix. So this is pretty good here. So right now, your beta of these vol products, of many of these vol products, is low to a sell-off, right? So when we're in a state of a contango, and this is an okay contango, they get better, but when you're in that state, it takes, you guys notice, it takes a little bit more of a sell-off to get a reaction, like a decent reaction out of the VIX, out of the vol products, right? The long vol products. That's because they have that low beta. They're sitting in a state of being challenged, right? This roll yield, this negative roll yield is a challenge for them. But what happens when we flatten out? Well, that beta of those vol products gets high, right? That's where you start to get the reactivity that you want. So it's not that you pick the bottom on them. It's that now you have a market where there's some concern out there and you're going to get more reactivity. And then when the VIX is 28, 35, I mean, you get massive reactivity out of those products, right? That's why you know, probably you'll see Andrew piling into some of those things with maybe another hedge on the other side of the coin, because that's where your super beta is now. Those products are in a state of fear and very high reactivity. So right now, it's more challenging unless you hedge out, which is what Andrew does in weekly profit cycles. And I'm not sure if he does it here very much, but that's if you can kind of own protection, but also hedge out the theta risk, right? That sort of erosion. Then that can make some sense, because this is where you're going to get erosion, right? I don't know what these products are. I have a little thing somewhere that shows me that, you know, VXX is losing 8 cents a day or something like that. So yeah, I love Corning, Jerry. I love it. I mean, it was just $100 and it went to 160. So it's kind of hard to reach for it here. So my view is that if things kind of get a little bit touchy, which they're not, they're hanging out, like the QQQ's hanging out above important levels. The SPY is hanging out. I mean, it looks like nothing's going on for 4 months, but we know that everything is, there's a whole bunch of movement under the hood. I mentioned this on Ticker Highlight the other day. We've had the single stock option pricing sort of as a group is the highest it's ever been versus index pricing. And what's that due to? Why does that happen, guys? Why does something like that happen? And why is the environment so unique in delivering that kind of outcome? Right? Why are we getting index vol saying generally, and individual vol? What's that called? The card starts with a D. The word starts with a D. I was trying to think of something it rhymes with. Dork version, dispersion, right? Software is going to 0. Infrastructure is going to 1 million. Staples are going to 1 million. Staples are more expensive than mag stocks now. Tom, you don't like the tests? Anyway, dispersion. So that's it. That's it, right? So it looks like nothing's going on, but there's a lot going on under the hood. So for me, I think infrastructure plays are important as long as we don't fall apart here. So I think the GLWs of the world. Now, this has gotten pretty damn far from its moving average. So maybe we get, like, I'd say like a little pullback into maybe 145 might be interesting. GEV, this is one of my picks for the year. My target was 800. Now it's 860. I I think we all put out our picks for the year a couple months ago. I wonder if I've got any bad ones. I think Google was one. It's probably down a little bit. I think I picked GLW as well. So I don't know. These things are kind of crazy. So if you look at consumer staples, they're really expensive. But there's always a but. It's if the disruption continues to happen, then they're going to the money rotates somewhere, right? It's going to rotate somewhere. One of the things that I kind of like, maybe we can look at, I think the options are a little crap, is like old age homes, right? I bought this down in here and I sold it, and I'm sort of looking at maybe getting in again. So there's Welltower, there's another one called Ventas. These are REITs. Can AI disrupt old age homes? Kind of. I'll tell you why it's kind of. This is why people are piling into real things. AI is not going to, disrupt a Happy Meal. But, the old people, the old age homes, I mean, it's possible that robotics oh, you're already paying for one, Jane. Did you already put a down payment on yours for a few years from now? Or it's probably for one of your parents, right? So, I mean, maybe it's quite possible that at some point robotics and good one, Jerry, for mom. Yes. It's possible that robots will be able to help our parents live at home for longer, right? So, that's the thing. But I think generally speaking, there's going to be a pretty big market for companies like this. And I think that's kind of interesting. So let's take a look at the options. So I really feel like focus is, especially, I kind of leaned into SMH the other day, and that was kind of dumb because I thought that's the one it's a physical area of AI that should do well. And it will over time, but they're just so sour on anything tech at the moment, except for photonics and a few things. So it's just a challenging tech environment, which is why I've been saying for a couple months, I think the US is going to be a tough market versus other markets, right? Other markets are just going to do better because they're more focused in stuff that's working. And digital is in a state of disruption that it's never seen before, I think. So I think it's the stuff that you can drop on your toe. I like silver. I was going to bring in silver today as an idea, but it's sort of popping up. Let's take a look at Well first. I think the options aren't so great, which is why I bought the stock. Yeah, these options are pretty crap. There's just like no open interest. A little bit up here. 480. Well, that's not too bad. Like a 230, but it's traded one contract. Just while I'm at it, I've been a little worried about, here's your Goldman. I wonder if it's going to dip below there. And you know what actually looks kind of crappy today? And this is one to watch. You should have this on your screen, KRE. So it's having a tough day. And I've been wondering if, that's why part of the reason I liked Goldman is I don't want to really be in personal lending. I don't really, like if you look at SoFi, that was one I pointed out. I said, I'm not sure I want to be in these guys, although they're diversifying away some of that. But look at this, it's been cut in half. Now, I've owned Hood, which has also been cut in half, but I feel like there's more of a durable business there. But, silver, I like silver better than gold because it's partially the sky is falling, but it's also the industrial parts of things. Jerry, you're funny. You wear the diaper? Are you talking about diapers or? Let me see here. Look at this, beautiful. Comes down here. Look at this 9 EMA, guys. Beautiful, crazy extension. And then below touches the 9, down again, touches the 9, touches the 9, down again, blasts through. And except for yesterday, which I don't know what happened there, I think it was Iran. There was some Iran. Anyway, this was like pretty much not a bit of craziness. And then, so now we're above the 9. So now it's sort of looking good. It's starting to break out again. And I think I was one sort of a bit of a theme behind it. And I like the theme, right? We got a couple days of red on the MTI, little yellow here. So this is something where we did one of these in Turbo Income. June's a little bit far. We could do April's maybe just a touch close. If we look at the vol's still pretty good, right? When silver's rallying, it's one of those things where it's might be an interesting calendar to the upside, because what you might get is your Vega exposure. Oh, the MTI, it's based on a whole bunch of stuff. SAR, moving averages, risk measures, risk gauges, stop and reverse SAR, a parabolic SAR, a couple of interesting things. So, this might be interesting because maybe we could play like a bit of a grind up. I have a butterfly on right now. I'll show you what I have. Do you guys ever do flies and things like that? So I've got the 75, 90, 100. That is, let's see, 75, 90, 100. I kind of don't mind that, because remember, and I never do regular flies. I do the broken wing flies just because I'm a directional guy. I'm just a directional kind of guy. I always kind of have an opinion, right or wrong. And we can kind of see as we move up into here, maybe we get just a bit of a grind up can work. Yeah, I'll tell you why it's maybe not always the best for something like silver, is because one of the benefits to the fly is that, look here, your long delta, of course, directionally, your long delta, but at first you're kind of neutral Vega. Yeah, it's a bunch of think script. No, market temperature indicator, Jerry, market temperature. But what happens is your long delta, but then when you get up into the middle of it, the thorax or whatever of the fly in this zone here, then you actually become negative Vega. So you can see here, I'm already short Vega. So under normal circumstances, you have a stock move up into the fly, and then typically vol drops a little bit as you move up. That's kind of typical. Hasn't been as typical over the last 6 or 8 months. We've seen the opposite because there's been this melt up and AI craziness and FOMO, right? So sometimes FOMO gets in the way of that. But as we move up, we have the long delta working for us, and we have the short Vega working for us, right? Short Vega is helping us too. And then if it sits around, if you're comfortable just kind of waiting, if you get into this nice profit zone, well, then you've got short Vega and you've got theta starting to work for you. So it's sort of my favorite Greek salad sort of position, because you're moving up due to your delta, and then you're sitting in this pocket of where these other ones can kind of take over a little bit. Do you see what I mean? Now, I mentioned it's not always the best for something like silver or gold, because they are a different animal, right? So as silver rises, if we get another big jump in silver, the vol's going to jump. So the Vega benefit, yeah, that's what I'm thinking, Harpal, is that if we position ourselves with like a long Vega, maybe short a little bit of, here, let's take a look at that. But still, it can work, right? Unless vol just explodes, and then it's going to cut into your profit. But then if it sits around, then you just kind of wait for it to come in a little bit. So what if we did, let's see, where's the May? What if we did something like this? What if we did I mean, it's already had like a 5% jump today, but actually I gotta close a couple things. I've got some calls here. We have our Jerry, I think you said you closed this over. Nebius is just schizophrenic, isn't it? It looks incredible 1 minute and then it's over. They are just so off of. Is GLW doing something? Yeah, that's going to be a reload at some point, eh, Jerry? I mean, the thing's up like 60, 70% in a straight line. So it makes me a bit nervous. But at the same time, what I'm trying to keep in the back of my mind is that I think tech struggles. So if we get a situation where there's some really good news and it feels like a rotation back into mag is warranted, then I think you want to be really careful with your broadening trades because they're going to rotate out and back in. But I'm not seeing anything that's going to give us that unless some company comes out and says, oh, agentic is great for us. But notice the Salesforce guy, Benioff, came out and he tried to kind of soothe the market and it really didn't do anything. So I'm struggling to think of what's going to come around the corner, at least over the next couple of months, that's really going to give us that tailwind. And that means probably the broadening trades are still okay. So a GLW down into the mid 140s, maybe high 140s, that's going to be interesting again. So let's get back to our silver. We could do something like that, right? GLW, we could do that. PPI didn't help, but you know what's very interesting? I've been telling folks that I'm hiding an IEF. I started buying back here and I was out money, and then I've just been adding. Now I want to show you something very, very interesting. This is something that I had told mentorship members and maybe some turbo income. I said, at some point, I think corporate bonds aren't as good as treasuries, right? So in a world of extreme disruption and people getting more fearful, what's going to happen? You're going to see, especially what we're seeing in credit, and now what we're seeing, like there was a time where I was like, I just only want to be in the very highest corporates, like MAG. Now I'm not so sure. I'm not saying something's going to happen to the MAG, but it may not be as clear sailing as you think in a world of massive disruption. So what can you trust? Hopefully treasury. So this is your 7 to 10 year treasury. Look at this. This position is doing great. And actually today, what I did is I meant to do this. I wanted to do this like a week ago, but I sold out of my QLTA, which is triple rated corporate bonds. And I want to show you something really, really interesting. Look at this. I was just looking at this. It's funny you mentioned it because I was just looking at this. Okay, so here is the 7 to 10 year treasury versus the AAA corporates. And look at what's happened. It tends to trade in this kind of range here. And look at down here. So when this comes down, that means people are favoring corporates over the treasuries. And when it's going up, it means people are favoring the treasury over the corporates. And so look at what's happening here. The market is telling you that it's a bit nervous. So in times of uncertainty, you get a little bit more of an outperformance out of treasuries, right? That's the place of safety where you're pretty sure the government's gonna make good on its debt, right? So this is doing well. If this starts to break out, I think this is a bit of like a warning sign, right? And I think you don't maybe want to be long corporates, and certainly lower quality. Exactly, Harpal. I think if we continue to see more potential disruption, like whatever it is, Claude and OpenCloud, all these things, like if there's more of this chat, if there's more of companies laying off 50% of its workforce, like Block just did, if there's more of that seeping into broader sentiment, I think we could get more of a move here into something like that. So I'm actually looking at IEF, and I've sold out of some QLTA, and I will probably, piece into this if it comes down a bit, or even if it doesn't. So to your point about inflation, hot inflation, does IEF care? No, it doesn't care, because I think there are maybe bigger forces at work here. Why is it up today? Why does it keep going up if inflation's hot? Well, the truth is inflation is going to be, AI is very deflationary over time. Short term, yeah, you're going to drive up. You're going to have bottlenecks. You're going to have supply chain problems. You're going to have higher pricing from memory chips, from copper, from all the stuff that's getting more expensive. But in the long run, the cost of compute is going to zero. And it's very, very deflationary. So that's why people just really want to own scarcity. They want to own real things right now. So something like an FCX, look at this beautiful touch of the 9-day bouncing again. This is something, if it settles in here, I think another shot at FCX could be interesting. So let's not get distracted. Let's go back to silver. And because I got to run in a bit, guys, I can't do a full hour. But let's say, what if we did like a calendar, what if we did like could we do like a March 31st, something a bit bullish? Now, keep in mind, silver could pull back $6-7. This is a viewpoint. Let's go. How about we go? Does Andrew do he does these, right? He does the calendars and things like that. So let's go. What if we did? We're gonna sell a March and maybe buy March 31st, buy in April. Could we go out to May? And that gets a little bit expensive. Maybe buy in April and sell like a. But we could do, we could buy like a 90 and almost, turn it into like a diagonal with, is it not letting me do that? Oh, I see. It wants me to do the same strike. You could almost buy like a 90 and sell like a 95 or something like that. So this would be buying the April and selling selling a March. Buy April, sell June. The only thing I don't like about that, Ken, is SLV usually has call skew. But it might be, ideal would be we just kind of like maybe chop around a little bit and we even scalp that short 90 at some point. And then, but if this thing runs up, the thing is, remember we talked about how the vol can kind of jump. So if the vol jumps, then our long Vega, we have a little bit of long Vega. It's not a massive amount, right? I mean, it's in April, but there's still some Vega there. So we get a little punch from the Vega and you're short you're short a bit of gamma, but that theta there. Yeah, exactly, Ken. Yeah. Okay. I see you switched it. Yeah, exactly. So you own the Vega and you sell the theta gamma. So something like that. Yeah. Maybe like, because at some point I think silver goes a bit bananas again. Sell the April, buy the June. So if we sold the April, and we'll look at the Netflix in a minute. That could be interesting too. So we sell the April, we get about an 86 vol for that. And then we could buy the June. So many strikes. 83 vol. So we get just a little bit of a scalp. Yeah, it could go to 100. Oh, change to a custom. Yeah, you're right. Let me do. Calendar to custom A. So what if we go, let's do analyze. How do we do that, MM? How do we get the custom calendar? Oh, can you? Wow. So click on the bid or ask, then go to your next expiration. Okay, so we're going to buy the June. And we're going to sell, let's say, in April. Like, does that work? And then we go back to the June. Is that how it works? Oh, okay, let's try that. Diagonal. Sorry, I do most of my trading on a different platform. Let me go diagonal. There you go. Beautiful. Thank you. Let's get rid of this. And we're going to go, we're going to buy the June 90, right? We're going to sell the April 95, something like that. So $640 for a contract. And, you know, maybe we chop around just a little bit and we get a chance to play that. And then maybe it explodes and we get just a little bit of a Vega bump out of this. We don't know. I mean, to do it properly, you'd have to really kind of analyze how it's acted before. That's great. Thank you for showing me that. So that's kind of interesting. These risk profiles don't really show you enough, but you can see we'll pop up into here, and then in here you just you're good, right? You don't have like the normal calendar. You feel like I could be really right on direction and lose money. Here you've got some nice room to make a little bit of money. And then if it comes down, because you like silver, which I do, you maybe have a chance to buy back that April at some point. Back, like if it comes down into support around 78 or, somewhere in the high 70s. And if it finds some stability, I wouldn't catch a falling knife, but if it finds some stability, that's where I would maybe buy that April back, right? Maybe it gets down to 70, it's possible. And then you're just going to sit on those other ones for, not too expensive, and you're ready for an explosion. Something like that. Does Andrew play it like that, or does he usually put them on and then just completely take them off? Or does he kind of play with the legs a little bit? He's the calendars, but does he take them all off, Does he just take them off completely, or does he sometimes adjust like the strikes? Like that better? Okay, we could look at that. Now, the other one is too bad we didn't see this yesterday, but again, just like silver, here we've got this move. Yeah, I bought a bunch of stock right in here. It was maybe like 82-ish. And I was like, you know what? I'll buy a little here, and then if it drops, I'll buy a bit more, but it's not giving us that shot. But this is interesting, right? Because I think this puts Netflix in a new light. I think it's interesting because if things do get a little tougher for at least part of the population, I think he does, Harpal? Okay. I think cheap entertainment it's hard to go wrong with that. It's had a hell of a sell-off. It does have one big negative, which is YouTube is a really, really solid competitor. But having said that, this isn't going to be a trade for the next 5 years. This is a trade where we've hopefully washed out a little bit of the negative sentiment. The only thing is, it's hard to put on a calendar here. Like, I almost wanted to maybe try to fill this gap down to the mid 80s. That might be where, like, it gets down to the mid 80s, then you kind of play like a grind up towards 100. Here, I don't know. I feel like I'm chasing it a little bit, but I like it. I like it here. I'd just rather get it a bit lower. What do you guys think? Or is it worth kind of playing? Let's see what they've done to the option pricing. So if we looked at something similar, I kind of wish Netflix had won the bidding war, because I think brands are going to be an important thing in a world of fake. So the April by a May. Yeah, something like that. I mean, something like that. 250. You buy the May, you sell the April. Let's see how that looks. It's going to look similar to the other one. So for $259 a contract, you've got, I do think it could pull back $4 or $5, especially if the market gets kind of crappy, soft here. So there's a chance that if we get in here, I think your downside is probably 86, 87. So let's put it this way. If we did a one lot, I think you could take a little heat on this. You could take about $100 hit. And then if it stabilizes, you could buy that short April and then play the upside for a follow through relief rally. What do you guys like better? March straddle is $6 on Netflix. Strangle, eh? $6. Yeah. 93. Yeah. Not bad. I mean, you got $3. I don't know. You think so? The strangle? I mean, I think it definitely has. I don't think it has much reason to go back down into the low 80s, but I think it could have a run to 105, 110. It could. Hey, surf dancing. I don't know. I don't with the whiteboard. Oh, you mean what Andrew writes on? Oh. So what do you guys like? Do you like yeah, I don't know. The strangle would be, I mean, you could just play like a little follow through, like maybe like a March 100. I mean, you could play that for a 60 to 90% win. I mean, if we get a little bit more follow through here, that could be interesting. April would give you a little bit more time in case the market gets a bit soft. So for $3, I think you could turn that into 450 fairly easily. You could turn that into, yeah, you could turn that into even more. You could turn that into $4 or $5 easily, $5 easily, if this thing goes for a little run up. Strangle on Netflix, eh? I'm hesitant to like buy much premium in this market. It just feels like nothing's going to happen. Just a bunch of false starts, false sell-offs, false starts. Oh, okay, yeah. Sorry, surf dancing. Well, I'll put it out, right? I'll put it out in the trades. So if we went, maybe, what about like a lopsided kind of strangle? If we did maybe one put and a couple of those, right? So if we did one put, two calls, something like that. So if we get a collapse and it fills the gap, then you've got a piece that you can play with, and then you can play the upside. Oh, he skews. Okay. All right. Want to do that? So we'll do like a March, but this is just long premium. We're not short premium here. So you can maybe do two of these, going to cost you about $240 and another $140 for that. So for about $380, you've got this on. So why don't we do that one? Here, why don't I put it in the, why don't I put it in here? Then you can see, what happened? Buying two March 100 calls for, well, we'll just say to open. 1 March 20 88 put to open. How about something like that, guys? Roughly 380 total per contract. You guys like that? You want to do the silver as well, just to kind of see? Silver. I like some of these infrastructures, but I'd like to see just a little bit more of a pullback. And I think healthcare is okay too. Like I think healthcare is kind of and look at healthcare here, guys. Like I think it's an interesting spot that hasn't been given a lot of the love. All right. So what do you guys think? You happy with that Netflix there? And then we could also do I think you got another class coming, right? The silver could be interesting too, right? Maybe why don't we try the silver as well? So I'm going to throw out the silver. Andrew's going to be like, what the hell are you doing? You're doing all this trading. Silver, buying the April 17, June 18 calendar, diagonal, buying one June 18 call to open and selling one April 17 95 call, June 18 90. Note the different strike prices. Okay, let's give it a try. Okay, I'll think about the risk management, or I'll ask, Andrew what he thinks of that. So this is going to be roughly 645. So 645 per contract. Something like that. Could be kind of interesting. I'm going to send them out right now, and I'll also put them right in the chat. Okay, guys. I'll catch you later, okay? Thanks for coming. Nice to see you all. Silver number 1.